The opportunity inherent in the lithium industry is difficult to overlook, given the strong secular trends and tailwinds that support it. According to leading analysts, such as Rystad Energy, lithium demand for battery storage will continue to outweigh available supply until as late as 2030, when production will finally ramp up accordingly. Based on statistical data and trends, approximately 8,800 gigawatt-hours by lithium batteries will be required by the end of the decade, operating at a capacity of 100%. To put this figure into context, demand for the full year of 2021 stood at merely 580 gigawatt-hours. This is an indicator of the explosive growth potential that the lithium industry is sitting on. To add, surging lithium spot prices have been a major boost to lithium producers, who have been increasingly enjoying high profitability margins to facilitate business expansion. Investors have been quick to identify this booming opportunity, making lithium stocks one of the most popular classes of investment in recent years. In light of this irresistible opportunity, we bring to you in this video, the 5 best lithium stocks to watch in the battery energy storage market. We begin our list by taking a look into Livent Corporation, which trades by the ticker, LTHM. Livent is a chemical company that specializes in lithium derivatives for battery storage purposes, and has production facilities across the US, Argentina, England, China, and India. 2023 saw LTHM expand its partnership with Tesla, entailing the supply of lithium hydroxide for its EV batteries. One factor by which we can gauge the investment appeal of LTHM, is by the mere fact that 96% of its shares are held by institutional investors, such as BlackRock and Vanguard, which combined own more than a quarter of the company. The remaining 3% is held by individual investors from the general public, whereas 1% is with insiders within the management. Business performance has been terrific for Livent, as is evident in its Q3 figures. Net profit surged by almost 1,200%, whereas EBITDA ballooned by more than 6 times over a single year. This indicates not only the company's strong exposure to the growing opportunities, along with rising lithium spot prices, but also its ability to capture value amid favorable market conditions. Similarly, the company is working hard to ensure profitability, amid growing lithium demand for the following years. It recently finalized plans to add 10,000 metric tons of annual capacity in its Argentina plant, and its Nebraska project will be expanding mining life by a remarkable 30-year period. Livent stock is a great pick for all of the reasons listed above, and therefore is a must-buy for any investor. The second stock we present on our list is Leo-Lithium Limited, which is dual listed on both the Frankfurt and Australian Stock Exchange, as LLLAF. Unlike most lithium players, Leo-Lithium is unique for a number of reasons, but the most compelling is its West African Goulamina project in Mali. Despite the abundance of lithium minerals concentrated across the continent, Goulamina is the first West African project of its nature, aimed at supplying the dynamic EV industry in China. Backed by Chinese financiers, and supported by the technical prowess of Australian chemical engineers, Leo-Lithium is a company on the verge of an epic boom. The Goulamina project is expected to kick off by 2024, with 100% of its Stage 1 output secured by the Chinese lithium processor, Ganfeng Lithium. 50% of its Stage 2 outtake has also been secured by Ganfeng, while the company is in negotiations with other players for its remaining supply. In addition to these offtake agreements, Leo-Lithium also has a lid on transport and logistics, following negotiations with the Malian government, and a 10-year storage and export agreement with authorities in Côte d'Ivoire. Despite having no noticeable income as of yet, the company's balance sheet appears solid, with a liquidity of almost $60 million as per its latest report. The coast appears clear for Leo-Lithium until its core project in Goulamina goes online, upon which point its stock price may undergo a rapid explosion. These factors make Leo-Lithium a highly exciting lithium stock to buy right now before its inevitable takeoff. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. For number 3 on our list, we take a look at the highly promising American Lithium Corporation, which goes by the ticker AMLI. Since the start of 2023, AMLI has taken off significantly in a sustained 60% price takeoff. This was primarily triggered by the company's recent approval and listing on the Nasdaq exchange. American Lithium boasts within its portfolio some of the most promising of lithium projects. Its Volcani site in Peru is the largest hard rock deposit in the country, and the 6th largest in the world. Similarly, its Nevada-based project not only is among the top 5 largest sedimentary lithium deposits in the world, but is also highly valuable due to its location within the United States, giving it access to the dynamic American EV and battery storage markets. Following recent explorative assessments, American Lithium, during the prior months, upped its resource estimate in its Nevada site from 7.1 million tons to an impressive 10.6 million tons. The company also has a valuable uranium division, which management plans on spinning off during the first half of 2023, allowing it to focus purely on its lithium business. This also frees up American Lithium from capital expenditure, amounting to over $400 million on an annual basis. Its shift to becoming a pure-play lithium player will further enhance its stock position. American Lithium's immediate strategic plays and long-term ambitions, coupled with the favorable lithium market opportunities, present massive growth potential for investors. These conditions make AMLI a ripe investment candidate, especially in the present market conditions. Next up, we take a look at the industry-leading American company, Piedmont Lithium, which trades under the ticker PLL. With its lithium integration business, Piedmont has a vision of a net-zero carbon future, which it aims to achieve with its high-grade lithium hydroxide technology for energy storage in the EV domain. The company has several strategically advantageous lithium projects under its belt, which deliver to it an absolute competitive edge, as the demand for lithium continues to surge. In its Canadian division, Piedmont enjoys a strong strategic partnership with Sayona Quebec, which deliver to it the benefit of robust infrastructure and favorable government policies. Similarly, the company also holds a 10% stake in a lithium site situated in the south coast of Ghana, giving it exposure to the booming mineral potential within Africa. Moreover, Piedmont also wholly owns 2 American projects, which include a 3,200-acre site in Carolina, and America's largest lithium hydroxide plant in Tennessee. Most significantly, Piedmont recently announced a strategic acquisition of Jordan Resources, which not only drastically increase lithium production capacity for energy storage, but also bring to the overall company a wide set of competitive advantages. These include a strong infrastructural setup, including road and rail access, wider market share, as well as enhanced profit margins. In light of the booming conditions in the lithium spot market, this is a highly prudent move by the company, which is sure to deliver handsome dividends to shareholders. Similarly, Piedmont also updated its agreement with Tesla, which will now include the delivery of 125,000 tons of lithium derivative for the company's electric vehicles battery system. PLL is an exceptional stock, with some crucial strategic advantages over its peers. The stock is a screaming buy, for all the right reasons. For the final stock on our list, we take a look into Pilbara Minerals Limited, an Australian hard rock miner which trades in the OTC as PILBF. Pilbara is among the leading names amid lithium suppliers, with its fully ramped projects in Western Australia approaching nameplate capacity. The company's distinguishing factor is its highly innovative approach. which gives it an edge above most of its peers in an industry defined by a more traditional methodology. Pilbara's Battery Material Exchange, or BMX platform, is a fine example of this, and brings to life a virtual auction system that secures lithium supply to the highest bidder. Similarly, Pilbara also developed an in-house ore sorting technology, which results in the highest grade of lithium ores, and significant reductions in production costs to the extent that the company boasts some of the lowest production costs across the industry. Its strengths can further be gauged in its financial performance, which has delivered top and bottom line growth at remarkable levels. Its gross revenue of $1.04 billion during the first quarter of 2023 was higher than its total revenue during the entire fiscal year of 2022. Moreover, its cash position saw a surge of 133% during the quarter, putting it up to $1.38 billion. Above all, Pilbara stands as being very attractively valued, at its $2.90 price per share. This is evident by its PE ratio of 21 being drastically below that of most of its peers. The stock is perhaps one of the most obvious lithium picks to opt for, and is therefore a strong buy. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ride the growth wave that the lithium industry anticipates experiencing this decade. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.